Do it. Okay, 5, 4, 3, 2, 1. Wait, what's this called? Big announcement coming soon?
2, 1.
5, 4, 3.
GM, welcome back to the Big Announcement Coming Soon podcast. I'm here today with Nick and David. Mike is out for 2 weeks doing fancy stuff in South Africa. How are you guys doing?
Yeah, pretty good. Pretty good.
Yeah, great. Happy to be here.
Yeah, it's been a good busy week. Prices keep going up. The FUD keeps going up. It's like the more FUD we get, the more prices go up after a quick little dip. So I'm not sure if that means it's so bullish nobody cares about the SEC anymore, or it's exit liquidity pumps of get out of your coins and get out of everything. But and then by the end of the week, and David, you were retweeting some of this, that a lot of the FUD added on was extra unfounded stuff, like this stuff with Circle and Coinbase. Even CZ came out and said, like, Jeremy Allaire never alerted them that Paxos BUSD was bad, and kind of calmed down some of it. So the SEC took some actions, but it might not have been as bad as we thought.
Yeah, it was less like immediately catastrophic and depends on how much blood loss occurs to the patient over time is more of the issue, I think.
Yeah, I think the clarity on USDC and Circle, but with some of the other actions, it's been interesting of, like with Kraken, what's a security, because they're guaranteeing some stuff on top of the staking, and I'll get to that in mine. But as I think maybe they're accidentally bringing the clarity that everybody in the industry has asked for, and 6 months from now we can move on from that and kind of work with the clarity.
Yeah, potentially. It's gonna be interesting, and it depends on how we bleed into other topics we're talking about. But like, if I don't know, like I guess like what's interesting is back in the day, like remember when like stables were considered. I don't know, when I first got into crypto, like one of the weird things psychologically you don't remember is that like you didn't want to sell. Like if you sold, then it felt like you were exiting the game, and like even if it was going down, you didn't want to exit because you might like miss out or something. And so like nobody used stables. It was always like if you exited into Bitcoin. And then Tether maybe, but like Tether was scary. It might blow up at any moment in theory. Never did, but nonetheless. Now we live in a world where stable coins are the unit of exchange. And so like if you really mess with them and you change how liquid they can be, it really changes the game. What that means is anyone's guess. I guess long term, Simon Dixon would say it's good for Bitcoin because it becomes the core unit of exchange again in a bigger way. Short term, obviously, it means everything is more at risk, and so people exit the market, so it sells a bit. But that hasn't really happened recently. So I think it hasn't really caused a massive crash like in other actions, and so it's probably more like BUSD isn't immediately stopped working. Like that, it's allowed to be redeemed until 2024, I believe.
And that's just the Paxos US one. They have 80% of their BUSD is held in other banks. Somebody else is generating the stable coin.
Well, that was a big problem. I was watching a thing on it today, and is essentially like what Paxos got done with is that Paxos like allows there to be the creation of BUSD, which is fine. That's not a security, but they're also responsible for understanding what that product does in the market. And what happened is that the BUSD was being used on Ethereum chain. That's fine. Then it was ported and bridged over to BSC chain, and Circle, as Bloomberg reported them for not having it fully backed. They were playing games with it. So at some point, like they were not actually fully backed BUSD. And so because that happened, and because essentially like Paxos should have known about it or could have known about it or might have known about it, that's their problem because they are the asset owner because it's not actually dollars. And so as a result, they have to basically stop working with Binance because that's essentially the subtext of the whole thing. It's basically like you are dealing with Binance. We don't consider Binance to be a good actor, I guess you would say. And so they're trying to cut it off. And so as a result.
And specifically because BUSD was coming onto other chains, there's BUSD on Tron, I think. But the argument then would be that if Circle is in control of all of the USDC that's issued, and it isn't issued by multiple people, then it doesn't start to become under that area that was bad for Paxos and Binance.
Yeah, like Circle, exactly. Like you would say that stable coins as a whole are likely to be okay, and that's why Circle, Coinbase, and Paxos are so ready to fight in the legal battle against
Hmm.
SEC on this. Because how can a
Hmm.
stable coin be whatever? It'll really be like you can't offer interest on those coins
Yeah.
because that makes it not a whatever. And the problem for that for them is that that really cuts them off at the knees for being like, so in times of badness, you have stable coins and you want your stable coins to be earning interest as equal to the banks. And in the
Hmm.
past, interest rates were at zero, so nobody cared. But now they're like going to go to 4 or 5%. You could be holding US treasuries or bonds and stuff and be earning more money with that stable coin that's sitting there on Coinbase. And Coinbase can't invest it because it's not a real bank. And so that's what they're getting done for. They're basically like, you can't do anything with these dollars. They could just sit there as an asset. And that
Hmm.
hurts them
So we're
because
kind of
unless
waiting
people
to
are,
trade that whole time. And if you're not trading, pull it out and buy a 3-month T-bill. Not that it's quick
yeah,
and
and
easy. You're not doing that,
that
but
hurts liquidity a
that's the
lot
idea.
because liquidity, well, yeah, liquidity comes out of the system, and so people can't act as
Mm.
quickly. And so like rises don't jerk up and down as much because you can't just see a whole flood of sidelined USDC sitting there to spend because it's out in other markets. And so this is kind of a way,
Right.
coming to my article later, of essentially just kind of hampering, crippling a little bit the
Hmm.
crypto
Hmm.
ecosystem infrastructure to bring it back down to manageable levels. I would get from SSE's
Yeah.
perspective, I
And
guess.
before we get there
Mm.
today, you're talking about liquidity, and Nick Blur just did a big, well, big. It's been what, 6 months of teasing us, and they dropped um, somewhere between 18 cents and a few people $6 to $7 billion, it seems, if I believe their tweets of Blur tokens. Um, sorry, before we get to that and the liquidity and what all that's going, can you back up and what is Blur? Where did it come from? It's another NFT exchange, but what's the deal?
Hmm. Yeah, sure. So, yeah, it's a competing marketplace that has seen significant growth in the last like 4 or 5 months. In fact, it accounts for 30% of all the trades, like then of like 30% of like OpenSea's volume.
Hmm.
Uh, it's capitalized on kind of like behavior economics and incentives. Like looks rare, it started off with like a cryptic airdrop where you had to kind of I don't know, like not really play to earn, but there were certain things that you had to do, right, in order to claim your boxes. The first airdrop, it was three different parts. The first airdrop was like I mean, this is Blur, right? So as I'm talking about the airdrop, I'm talking about Blur itself because this is how it's kind of debuted on the scene, right? This is what garnered the attention. Um, they had like three different subtypes of chests or boxes that you were
Hmm.
eligible for. Some people were eligible for 25, and they were different rarities. The next one was all about like Blur bids and
And that was based on
listings.
like what you had spent on gas or spent on NFTs on other chains. And if you did the retweet of their thing, and then if you listed an item, right? When you're saying the three phases, like you had to do actions.
Yeah, yeah, but even beyond that though too, right? Like, I mean, I think there was those initial requirements like the tweet and whatnot, but then it was also about like how much more involved you were in the ecosystem. Listing helped, purchasing helped, selling helped. There was a liquidity pool there. There were blur bids where basically a lot of people were farming it. Like, I mean, there was a really funny
Hmm.
tweet today that said someone said, try good luck next year explaining the H&R Block blur farming. But a
Yeah.
lot of people made money off that. And you've seen this. Like, remember we talked last week about the ball being under the cup, or we talked on the Twitter space about
Hmm.
like find the liquidity game. You could see it happening collection by collection. And I think what drew me to Blur was like how significantly cheaper and how much more volume and action was taking place in the Ret Guy community on Blur compared to LooksRare or OpenSea. So I was like, what the hell is this?
But
Every
that's the
bot
farming
that I
though, right?
saw,
That
it
won't
was,
continue
right?
next
But it was
week.
also, and that was also connected and correlated to a very significant drop in floor prices on Ret Guy and other
Oh, okay.
other ones,
Yeah.
right? So yeah, it's an interesting thing. I don't know. They say there's a season two coming up. That was part of the tweet that they forced you to tweet out today to claim. So there was a tweet to claim today. Uh, yeah, you weren't allowed to be an American and claim. So there's that.
Protected.
Protected. There was a box. Um, but no, I think. hard to say if they're here to stay. I don't know a point of difference that they really have aside from, they're really trying to incentivize users financially. But I don't know if they can sustain that, right? Like we saw the token rise or get dropped initially around $5.04, dropped all the way to 48 cents in eight
Hmm.
hours.
Well, in the
And
first 15
then,
minutes, it was down from $5 to 50 cents, and then it just continued around there.
oh,
Like it was a
really? Yeah.
straight
See,
drop. Yeah.
just a just a rug. Not really a rug, but everyone does it. I mean, it's free money, right? What are you
And
gonna?
what's the point if they're giving away the tokens? Why would you keep them
That's it,
unless
right?
you
There's no,
want the
but there,
discount there, right? Does it give you
I
a
haven't
discount
heard
trading or
anything.
something?
Well, I haven't heard anything about discount trading. I think there's no trading fees, which is another like kind of standout thing. There's another thing I'm going to touch on in a minute about how they found a backdoor to kind of allow, like using Seaport, they found a backdoor to allow people to list banned items from OpenSea on Blur. So that's something that, I don't know if that's good or bad, but there have been people who got banned for no reason. Like I have
Hmm.
some Twitter friends who've been banned, unfortunately, for the wrong thing, and they still can't get back on OpenSea. But we also know that that's where most stolen NFTs end up too, right? Like
Yeah.
banned from OpenSea and then maybe now on Blur. Um, yeah.
Yes.
So
So
there's a few things.
interesting. So I wonder what their take is on just legal and stuff. Like maybe they're like super renegade and let's go for it. But so far, I've heard a whole bunch of red flags. So like, so if you're American and you try to claim Blur, you have to hit a checkbox and say I'm not American.
Hmm.
Well, there is a checkbox that just says, like, I am not an American citizen, and you have to click it to proceed.
Yeah, because I listed, I'm not
that's
claiming. Frankly, I don't think the
that's not going to
gas will
hold
cover
up.
the $4 I'd make from it anyway.
Well, that's why I saw funny things where it's like, yeah, someone paid like $100 to claim like four
There
bucks and
was
then paid
that.
another $100 to sell it.
Hmm.
Yeah, there's that because gas has been outrageous. There has been some who have been doing the farming successfully, and there were a lot of people who made a lot of money. But again, there's also a lot of people who got scammed again because, like it or not, these kind of days bring out the links that look very similar and fish people and drain
Yeah.
their ETH. So that happened. I heard a couple of stories about that too. Um,
Well,
yeah,
and talking about
but
scams, so okay, we have OpenSea, which is the big established player. LooksRare came up a year or so ago, did some cool
mhm,
token stuff where you can get rewards for listing and using the platform, but hasn't done well. Um, Blur
right,
is
right.
recent, and then Ledger launched Flip XYZ recently. And I know there's one or two other exchanges, but
Hmm.
if OpenSea is kind of the main one, right? If you want liquidity, go to Uniswap, who bought Genie XYZ because it hits all of them. But this one is
Yeah.
launched by Richard with the E, one of the crypto punks, and somebody else who I want to say was Beanie involved in this one. Like this, everybody involved in it had an apology story already.
Or wasn't 6529 part? Or not, maybe he wasn't, but there were a few
No, I feel like
surprise.
everybody, when I went through and saw who was working on it, I was like, oh, I guess this is their redemption arc. Like Kyle and Sue are on right
Mm,
now. But why would we not be on? Right, looks didn't go well, and everything about it was
right.
positive. The drop was well done. The people
Yeah,
behind
they
it, it
had
was all positive, and it
staking.
didn't do well.
Yeah, I mean, I think it's different projects. I mean, I don't know the tokenomics of Blur, but like Looks, I think, was very centralized, concentrated. So like the public listing was like 3% or something, and everyone else kept
Oh,
the tokens back. And I think like what I think Blur is trying to do is what's called a fair drop, where you just pass it out according to statistics and metrics and stuff like that. And I think that used to work. Like you could think Cope dropped back in the day, which again, in the end didn't work out. But if it happens in a bull market and people are like, all right, cool, yeah, whatever, whatever. But like
Mm,
if you just give people free money on a bear market for use of the platform, essentially they're hoping that those people are like going to be like real users. And they're like, okay, guys saw the
hmm,
use and they're going to stick with it. But
right.
like, I don't know. I suppose like you probably want to like, I don't know, space it out, have cliffs. I don't know, but like
Yeah.
all
I mean,
dropping everybody tokens all in one day. Here's all the supply. Of course, it's just
but
gonna. It has to
yeah,
find bottom price. That's the way it's designed, I guess you could say.
it's all marketing, right? It's all trying to make an impact and try to look like an innovator in this space. And my other article later will tell you that there's
well, let's get to
worse
that because
ways to
that's
spend
impacting
money.
marketing. If you want to talk marketing and NFTs, let's go on
Mm.
to DigiDaigaku. Hit the and
Yeah, well,
I didn't see it. I didn't watch Super Bowl, but
huh?
Yeah, I don't have
I didn't
CBS
see it.
yeah,
I
or
didn't
whatever
see
it
it,
was
but
on.
I didn't see it, but it was on my feed in real time, like while it was happening, because people were calling out the co-founder. But anyways, as I'm saying, like there are worse ways to spend money on marketing your project. An airdrop is, I mean, I for one, I'm okay with it. Like whether or not it's high gas fees or not, still somebody giving me money.
But you're talking
This
about the Blur
case.
airdrop still.
Yeah, yeah,
Okay.
yeah. That I mean, like, there's worse place to spend money. This story, $6.5 million spent on a Super Bowl ad, about pretty much an unknown project from a startup, and it's an NFT game and kind of an anime vibe, from a startup called Limit Break. Uh, sorry, Limit Break. And basically, during the Super Bowl, there was a little commercial that ran with a QR code that popped up for viewers to scan and connect their wallet to a mint site, essentially, for free mints. But what happened was that many users, maybe the majority, were redirected to the co-founder's Twitter account, and people with a keen eye kind of found out that there there was a tweet that was sent out even before the ad ran that said, "Oh, did you miss the QR code or did you miss the drop? Hit it up here, follow me, retweet, do this," right? The classic shill bot almost
Oh,
vibe.
so it wasn't a
Um,
mistake. They wanted to send him to the Twitter feed to make him play the Twitter retweet game.
Hard to say,
Tag
right?
three
I mean,
DGen friends. Hell yeah. Everybody in America should do it.
grifters are gonna grift, right? It just was the griftiest thing that I saw. It's
Oh,
like you
the
ran out a Super Bowl
grandest, the
ad.
superest.
Like, well, I mean, like, it's not like we're not in the public eye now about how there are slimy dudes that buy up time during sports events, right? But now after the FTX stuff is done, we have this dude coming out of nowhere trying to promote some anime game, with basically just engagement farming, right? To get more followers. Like he got like 80,000 followers in the day, but a lot of people were pissed off. But again, there was a Bored Ape that called him out, Troop Farmer, okay, on Twitter, and he said, "Bro, why did you rug the TV viewers by sending this early?" And it's time stamped, so like it was sent
Yeah.
early. So again, Blur, you can't fault them for trying something new and dropping money that way, however many millions they spent, because this dude just ruined his reputation and his project for 6.5 million.
I would say, yeah, that's a
Ironically, no.
yeah. That's a. I mean, I think sometimes we like ascribe like malevolent G4D chess genius to some of these guys, and actually they just like totally screwed the pooch on a decision where they're like, oh, is this not how you're supposed to do it? And now I've done it in front of the whole of America.
Mm-hmm.
Right? And isn't that a bull market move? Like who's doing that in the bear market right now? Like that's usually
Who's giving
like
this advice?
frothy, like, "Hey guys, let's pull our money together and send our profits to make a Super Bowl ad that takes us to my account so we
Yeah.
get more subscribers." Like that's
Yeah.
dumb.
Well, the advisor who sold them that idea probably made a lot of money and is in the Caribbean.
Yeah. I mean,
Yeah.
it's hard to say if this is all wash trading too, but surprisingly, the project's still was doing quite well at the time of this article, which was about
Hmm.
0.5 ETH and $750, give or take.
Was it
Dropped
promoing
down
or
to a
did
little
it
bit.
mint yesterday? Or was it just
What's
promoing a
this?
project that exists?
I believe it was minting that day of the Super
What
Bowl,
was the mint
but
price?
it was free. It was free.
Okay, so I mean, he's got
Okay.
royalties on the back end or minted a bunch themselves. And then do you know
Mhm.
what do you happen to know what the floor price is last time you looked? Like what were they when you say
Wait,
they were up? You said
let
point
me check.
0.8?
I can. The last, it was about like 0.39. I don't know what it
0.3?
is today. But this was during article time, right? Like, let's see.
Yeah.
Hold on.
Yeah, I'm guessing
Um,
or it's got to be down if everyone figured out how to sell them.
yeah,
Well, it's a
yeah. Well,
fantastic experiment in showing like how like you always think like I just discovered that this is not a good thing to do. I would sell now. How come everyone's not selling? And you can kind of like watch the arc of people's like behavior over time.
Mm-hmm.
And like
yeah.
we're still in the wait a minute, I just rewatched the Super Bowl and there's this ad for this thing and it's already at this price. I'm gonna buy it. And then like 2 days later, wait a minute.
I mean,
Yeah.
they're no longer trending on OpenSea, but they were trending on OpenSea. I mean, with or without the ad, and maybe this kind of cringy, social experiment is what they needed, right? To bring the degens out. I don't know, but I just think it's a bad look
Oh yeah, because
and
on one hand, I want to
poor
say like,
execution.
all attention is good attention and blah blah blah, but we've seen so many projects get attention for 5 minutes and go away that
Yeah.
if clearing 5% royalties to recoup 6.5 million, so they got to do 118 million in sales or something. Um,
Yeah.
You also got to
So
work in the whole like marketing and unregistered security to the entire America, legal costs into that because
it we're at a floor price
agreement
of
doesn't close. Like people bought it because they thought it would go up in price, and the people who are selling it probably paid royalties. So therefore,
10
oh no.
10%.
10%.
10%
Oh, so they only have to make
creator
65 million.
creator creator earnings 10%, and we're at a floor price surprisingly of 26.9, like
Did they put
0.269, right?
non-financial advice on the ad?
No, I don't know. I don't know. Maybe in
I'm
the
gonna watch this
once
ad.
you
Yeah,
scanned it.
I am
Yeah.
surprised. Like there's one project that I work with that I think they pushed out 6 months or so because it's based in Canada and they
Yeah,
keep following the rules and talking
yeah,
to lawyers and pushing things out. And
yeah.
other ones where they launch and I go, oh great, you guys must be, all living in Dubai if you're gonna
Dude,
launch this. And then they're like, out of Chicago, and I'm like, dude, the SEC is like right there. Like at least move your ass to Dubai before you blatantly break the law. Like mistakenly breaking the law is one thing, just
yeah.
blatant. Come on,
Dude, I have to
get
interrupt.
out first.
Gabriel Layden, the CEO, who still has the Follow to Win banner, has a fucking million followers right now as we speak. Like, I don't know
There
what's
you go.
happening. Like, this guy didn't have that many when that article came out, nor did like the Super Bowl. But man, maybe
Oh,
the
followers. I
QR
want
code
I want to
work.
follow him. I want to see what he does next. I'm not going to buy
Fuck
anything,
it,
but he's got a
got him
million and
on.
one followers, dude. Drop another ad. Come on.
I got his pinned tweet up, and I'm putting him on notifications. Because if anyone's gonna grift at this level, like we might as well take notes, you know?
Hell yeah. Okay, so grifting, David, Operation Chokepoint kicks off. Well, it's been running against different industries in America for a long time. Operation Chokepoint, you go after the banking access for different industries. Catch us up on this week in the games of Gary Gensler.
Yeah, totally. So this is based on a piece that Nick Carter wrote. So just look up Nick Carter and choke point and you'll find it. But
Hmm.
essentially, yeah, like what the concept is that like you can't go to a industry that you don't like specifically and put them out of business because that's illegal. Freedom to do what you need. But what you can do is put pressure on the people who provide services to that industry to say, hey,
Hmm.
we'll just make your life harder if you do it. So you can if you want, but it's probably not worth it. And so this is kind of what they do for like prostitution and for drug selling. Like weed, for example, is legal in a lot of places, but they can't get bank accounts. Why?
Hmm.
Well, they're legal. They can get bank accounts in theory. The banks just won't give them accounts because they're kind of blacklisted
Well, and
essentially
the banks
by
are also
the.
like cross
Federally.
state federal, and it's not
Federally, yeah,
federally
yeah, yeah.
legal. And then the state
Yeah.
banks fall
Mhm.
under that scared to thing, so it's all cash. Yeah, that
Totally, yeah.
yeah, a lot of different industries, adult entertainment, just the legal online stuff. A lot of that actually spurned. They went into Bitcoin, but then from Spank Chain from like 2018, like there were so
Yeah.
many people in the adult industry that it was a big part of crypto, and it was just a refugee from we can't
Mm,
use the banking system.
Yeah,
makes sense.
totally. I mean, I think like where it first started is like if you remember back in the day, us old folks, George Bush Jr. was in power, and almost overnight they canceled online gambling.
Hmm.
And basically we're just like, yep, no more banking services for you, because you shouldn't be able to do that. And it almost just, yeah, it just disappeared, and a huge industry just was shut down. So to think it can't happen in that kind of way, in certain ways, and crypto is obviously a lot more decentralized and stuff, but there can be huge kind of like attacks on systems and taking them down based on quick rule changes relatively.
Hmm.
So this is kind of similar to that, where essentially it is similar to that, where basically you want to try and make it as difficult as possible to do certain things, to shut down certain sectors. And so where this is, it kind of comes home to roost is that like Binance, for example, has been identified essentially by the SEC as a kind of not friendly actor because they purportedly sanctions busted with Iran, because they don't have a headquarters anywhere, because they are not an American-based company that runs stable coins that are American-based, all sorts of things like this. And so basically that's what they did with Paxos. So they just went in and were like, look, BUSD, as we discussed earlier, is a security because it's being used in a way that's not designed to be used, and you need to do something about it. We're suing you for it. And so they had to stop working with Binance. They didn't say the same about USDP, which is Paxos's local coin. Apparently, there's a Paxos dollar, and so that still gets to operate. And so essentially, what means is that you can continue to do this, like we discussed earlier, but your tokens or your derivatives or whatever, like copy one for one of a dollar, can't act in the same way as a dollar. They can't earn interest because it's not a bank. They can't be deposited into treasuries. This is what a lot of these people did, right? Or a lot of these companies did in the past. They put their coins into commercial paper, and that's considered good enough as backing, but not anymore. No, it has to be dollars. And so it severely hampers liquidity because those are just dollars sitting there earning nothing. And in an inflationary environment, that means they're actually losing value. So essentially, it's just kind of Chokepoint is trying to put the thumb down on a lot of different areas. And I would say that the largest problem for it coming up is that staking, for example, was only really introduced in the last 4 years. Back in our day, a coin was a coin. You didn't stake it and get more coins. You didn't get airdrops. None of that stuff happened, right? You either bought it and it went up, and you bought it and it went down. Sold it and went down. And that is essentially probably what the government would prefer to have happen. All these crazy derivatives and stuff like that, which are securities. They've said that, and they said, like, look at Kraken, what we said to Kraken, and follow the fines that we gave to them, and we will do the same because that's the rule. And that's basically it. Anything you offer, interest on or staking on or whatever. And so you kind of almost think back in the day, like when Coinbase, when I was starting up, had, like, I remember when they introduced Litecoin, and it was very exciting. It was like Bitcoin, Ethereum, and Litecoin. And even before that, when they introduced Ethereum, all the Bitcoin maxers were super pissed. Like, Ethereum is like shitcoin, can't be added to a real exchange, etc. and so forth. But and now there's all these other crazy coins. What if all those kind of peeled right back? And so the real risk to, I think, altcoins and crypto as a whole is not so much that they'll get shut down. It's more just you take a shotgun, you blast the liquidity away, and there's not enough liquidity for how many coins need it. And so they all must go down because people just can't keep buying them. And if you can't stake them, for example, if that comes in, then you are at a significant disadvantage to someone who can stake a coin to earn the inflationary interest that's coming from it. And so it changes the equation for a lot of coins in the biggest market in the world.
Right? We all got into, and say we all, us and the rest of the world got into Luna and Anchor because their whole thing was 20% yield. And that was a security, if you think about it, kind of that guaranteed return. And holding coins, a lot of people new to crypto instantly grab onto that, 5 or 10% APY of really inflation for staking and think, well, this is how I can keep making money. The Kraken one I thought was interesting. And like we mentioned at the beginning, it was a security because they protected from slashing and paid you a steady rate, even though the return from the chain was not, would be variable. And if I read this correctly, if they were offering just service to the staking and paying the exact returns every month, a different rate back to people, if they got slashed, no protection from Kraken, if they were simply taking the coins and sticking them on the network, they would not be a security because they had a program, an intermediate one that was consistently paying out, protected from staking, insured returns. And if you take away a lot of that insured returns, people are searching for, right? We want to make money. And if you don't know how to make it trading, you stick it in something that gives you 5 or 10%. And if it's not going to give you 5 or 10%, you stick it in T-bills because we don't want to trade. We wanted easy money to come back.
And which are registered securities, exactly. So when you invest money in a security, you're essentially looking for security in that asset. And if the security is promised to you incorrectly, or you don't understand yield, which nobody really does, obviously, then it's a false sense of security.
But they could offer it as a security, but then they'd have to sell it to registered investors, right? Would we be able to buy it like as a stock?
Well, that was interesting.
Security?
was interesting, and Simon Dixon is an OG you should check out if you haven't on watching the show. But yeah, he was essentially saying like a future world could essentially, if they did this, if they basically said all these commodities exchanges can't trade these securities, they all have to be on a securities exchange. Well, then you could still do that. You could move to T0, you could move to some of these other securities exchanges.
Yeah.
That never took off because nobody really had the impetus. But that could happen, and they could start moving them over. I mean, probably that is the next move because then you're actually moving to a regulated environment rather than trying to make the regulated environment come to you.
Yeah, and I feel like that's the thing that Brian Armstrong from Coinbase has said the whole time is what do we do? Is it a security? And then they don't write him back and they don't tell him and they say, can we offer this? We want to make sure, should we register as security? And they don't write him back and tell him. Clarity, right? The industry's asked for clarity since 2017.
Yeah.
Yeah, but they're also asking a very difficult question, just to be devil's advocate. Like clarity. So they're asking probably the people who know the least about crypto for clarity on how crypto needs to be designed to succeed for the next 10 whatever years.
Yeah.
And so like it's a difficult one to wrap your head around. Not that I'm thinking that they're being like generous by not providing clarity, but maybe they just don't want to get themselves into a situation where they said, oh, you said this was okay here, and then now everyone's basically invested. So Bitcoin, for example, has been declared not a security at some point. Now you have institutional investors investing in it and stuff like that based on that premise. If they go back on that, then these guys can sue them. And so they really have to be pretty careful what they...
True. Tread lightly.
Yeah. Oh, it's about to get noisy. The guys are here to put a new roof on my house. I just saw some folks walk by. Anyway, Chiliz is our last one to wrap it up. Chiliz has been a fan token running as an ERC. It's a smart contract, ERC20 on Ethereum, and they're launching their Chiliz. Yes. Sorry, Chiliz, and they're launching their L1 soon. So they're going to move. They've started as a contract. They have their tokens. They've been around for a while, and because they have so much other stuff going on in their ecosystem, they're moving to their own L1. You get more speed, more customization, and if you're now staking on Chiliz chain, you're providing security, small s, to the chain rather than staking your tokens with a contract that has no use other than yield, which makes it an SEC big security. So they're almost moved the staking of their token into a new way. You can do it, right, just yourself on chain, but then there's still an L1 EVM compatible with Ethereum. Do they stay secure? Is it worth how secure do they need to be for the value of what's happening on Chiliz versus the value of the token that's being staked in order to prevent attacks? And should they have just stayed a contract?
I mean, yeah, I think so. Like, it kind of feels like one of those situations where you have like some super tech guy come into your school and be like, or like office and be like, we should install this crazy setup. And it's like super overkill for what you need, but it would work. And so like, yeah, I'm not sure why Chiliz would need to secure their own chain. Why don't they just build off Ethereum consensus? And as well as then they have to update it and keep it all like, yeah, exactly. I mean, to me, it doesn't make sense. Maybe they have maybe they have a whole grander vision about other chains. I have no idea, but to me it would seem like a lot of work for why.
Yeah, ditto. I think it's an unnecessary, like over I mean, I don't know, just like that it's ambitious, but it's just an unnecessary venture to go down. For what, right? Like we're in an age where you just connect the dots. You don't have to redo everything or draw the whole picture.
Chiliz wallet.
Yeah.
Exactly.
I think Nick, you've got to if L2s and EVM compatible stuff works and L1s keep failing, we've been down this path. Do what's been successful.
I mean, yeah, ApeCoin kind of tried to do that, right? And now they're like, no, well, we'll see.
Oh, they I mean, because they're a contract still.
Yeah, that's true, actually.
Bitcoin prices, we got a minute left, gentlemen. It is 21.5, 22 today. David wanted 26 last week. I said 20.
Still calling for
25. You still want it?
Mm-hmm. Yeah, still calling for it. I mean, its CPI came out and it was hot and it didn't actually make a difference.
It didn't.
I was watching a what's it called, Doco with a podcast with some guy. Anyway, if you look at global liquidity and markets right now, actually liquidity is increasing. It bottomed sometime in September.
We're out. Nick, Bryce.
I don't know. I'm not sure. Meme cards will go up, I hope.
Perfect,
Up
gentlemen.
only.
Have a great week, and I'll see you next Wednesday.
Go.
Wait, what's this called? Big announcement coming soon? Yeah. 5, 4, 3.